We've got Meghana Dhar, who used to work at Instagram, Snap, now tech specialist based in San Francisco. Where should we start? Which one was more interesting for you?
Hi, Rahul. Honestly, they both were so interesting to me. Can't pick favorites with all my tech babies, but I will say, that, there's a common theme between the two of them, right? It's spend, baby, spend with AI.
It is. Well, let's start with Microsoft then. I know their shares were down a little bit. Once again, though, some pretty impressive figures when it comes to AI and how they're doing at the moment with that link up with ChatGPT.
Yeah, I think, what you're seeing is that AI has a broad appeal across Microsoft's portfolio, right? It can help their cloud, the Azure business, and then of course there's this big unknown on the consumer side with OpenAI and how that might help their consumer products as well. So really a lot of this AI stuff, some of it is reaping rewards now, but really it's a long-term play. And it's all about spending on that infrastructure now, that capital expenditure now, so that the investments come in later.
If you look at Meta, which you know as well, which you know, of course, very well from your time at Instagram, again, they really were doing well, riding quite high on an AI boom when it comes to their quarterly earnings, even though probably not quite as good as expected, maybe not as good as expected.
Yeah, absolutely. I mean, it's funny because you and I know Meta as Facebook and Instagram, and it's these consumer products, but really Mark Zuckerberg has been very conscious about making this a tech forward, a kind of deep tech forward company, right? And I think that's the positioning of his strategy, both internally and externally. And, you'll see again from their CapEx that they're spending a ton of money on that core infrastructure for AI, of course, with the belief that AI is going to end up driving and powering their ads revenue later and kind of powering the entire infrastructure in the future. The funny thing is they're still running a huge operating loss on Reality Labs, but they continue to invest in it too.
Yeah, is that going to work? Because that's always been a contentious point with Mark Zuckerberg when the sort of Reality Lab side of the company, a lot of people still quite skeptical about it.
Yeah, I mean, it's one of those things where it's kind of that disruptive innovation, right? It's like investing in a technology that's not necessarily 100% ready yet or 100% going to market or fully saturated, but there's a great opportunity there. And at the end of the day, Meta wants to be in the game when it comes to VR and AR, playing alongside Apple, Snap, any of the other big companies in that space. So I think it's about putting a stake in the ground. There's also a longer term strategic benefit too, right? Having a piece of hardware means you own a user end to end versus having to kind of pawn that out to Apple. So it's a long-term strategic move. And I think it's a smart bet to make, but it just hasn't paid off for the last 4 years. They've lost something like $58 billion on Reality Labs.
Wow, that is a lot of money. Stay with us for a minute, Meghana. Meghana, final thoughts from you. We keep talking about the tech companies driving the US stock market and how long can they keep doing it? How long can they keep doing it?
I mean, really, at this point, they really have to see some returns in order to keep doing it, right? I feel like we had a high a couple years ago, and now it's kind of in the build phase, the build and invest phase. So I think the belief and the hope is that that build will pay off. But yeah, I think it's a fair point. It's a lot of money being spent on returns that are not clear right now.
Listen, always a pleasure having you on the program.